Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's episode, we're going to be breaking down what $200 per week looks like on an M1 Finance account, really designed for a long-term investment. These are going to be the ETFs, stocks that I'm really not going to touch for the next 5 to 15 years. I have 3 accounts with them. I have pretty much just a standard dividend account, I have a growth account, and then I have a Roth IRA account. Now, the reason why I have 3 accounts with M1 Finance is because I want to be able to put different amounts into different accounts and stocks. So I just found that it was honestly easier just to set up 3 accounts, one designed for retirement, one designed purely for growth stocks, and then one really designed for long-term dividend hold. Like I said, on average per week, I did invest roughly $200 per week, and I've been doing this for about 9 months now. So my total portfolio is right around $14,000 if you combined all of the accounts, which in my opinion is awesome because I'm only 21 years old. So I plan on, seeing this grow. And I have 2 other accounts. I have a swing trading account and a day trading account, which are well over $10,000 each in value. So let's look at my M1 Finance account. Now, when the first thing you guys look at my account, you might be saying, well, Carter, you only have $11,000 in your account. Well, if we go to transfers here, you guys can see I have around $14,100 in this account, and I put roughly $100 per week just towards my general dividend account. And then I put $30 a week in both of those. And the thing about this is I definitely increase this over time. Anytime I get extra money, I'll put $200 or $300 in it. And honestly, on average, I put an extra probably $500 to $600 per month into this account. Just anytime I have leftover money per week out of my budget, I just throw a little bit in it. The reason why is because I would rather see my money grow in the stock market than pretty much die in a bank account. So that's just kind of what I do. So when we first go to this account here, you guys can see I'm up around 35%, which is fantastic. That's outperforming the S&P 500 threefold, because on average that gets around a 10% return. And I'm up around $1,100 in value, which is fantastic. So you guys can see my largest holding is just the S&P 500. The reason why is because 96% of hedge funds investors, the people that actively watch and buy stocks, can't even beat this. So you might as well just be in the S&P 500 or have a really large stake in it. So that's what I did. My second largest investment that I have is ticker symbol VIG. This is a Vanguard Dividend Appreciation ETF. So these are going to be, a lot of the holdings in it that are dividend kings, aristocrats, and companies like that. Companies that increase their dividend payout. It's phenomenal. Now, as we continue to scroll down, the next one is Google. I'm a huge Google investor. I have actually another account where I did buy actually 2 full shares of that. But now we have QQQ, which is pretty much just a heavy tech ETF. We have Nvidia, we have Home Depot here, we have Costco, Microsoft, we have Visa, Facebook, Apple, Bank of America, Amazon, Cisco, Waste Management, JP Morgan Chase, and then a lot of ones that are really just only 1% as we continue to scroll down. The reason why I have, and then we have 3% actually in the bond market. And a lot of people don't understand why I put money in the bond market. I actually use it as like a holding of cash. So the reason why is because if you guys leave your money in a bank account, right, the bank is winning and you're not getting any interest off this. But if you actually just put your money in the bond market, it doesn't move as much, but you guys get paid a monthly dividend, which is fantastic because you can start compounding your account really, really fast. Now, we do have a lot of other fantastic companies in this that I am super heavily invested in, and I'm super excited to see where they go. But the biggest thing is I understand my risk tolerance, right? So I'm not investing 100% of my money into companies like AMC or GME or companies like that, companies with really high risk. I felt like I did a good job diversifying my account and understanding that you know, this is more of a long-term outlook. Now, a fun account that I did was pretty much just a pure risk account. Any stock that I felt like has super high growth, but also super high risk, I just put money in it. And I put it in this account and I'm just letting it go, and I'm putting 30 bucks a week, and I'm just gonna see where it's at, you know, in 10 years. So I have about $1,000, and I do plan on definitely getting this to about 10 by the end of this year. So I definitely got to increase that $30 per week. But you guys can see I have companies like Shopify, Lemonade, Adobe, Google again. Google is a really high growth stock. Microsoft, Square, Nvidia, Amazon, Apple, PayPal, Facebook, MasterCard. We have Palantir. For some reason it's not letting me scroll. There we go. We have Palantir, Rocket, Airbnb, Snowflake, Delta Airlines, Chipotle, DoorDash, Tesla. So the biggest thing when looking at this, you might be looking at these and being like, okay, well, I'm up 47% off PayPal, but I'm also down 11% on DoorDash. I'm down 11% on, or 16% on First Solar, 21% off Spotify. So the spreads on this thing are a lot larger, right? But in the long term, we still have that nice, solid upward trend in the market, and I'm up 19%, so you cannot beat that. Now, the biggest thing, my Roth IRA, I do plan on maxing this out by the end of this year, and that's about $6,000. So I got to get to work. I've been really investing in myself lately. Normally I do invest a lot more, like I said. But this one, I'm only up 17%, so it's not nearly as much as my growth portfolio and my dividend stocks, but that's completely fine because this is a long-term outlook. I can't even take out money from this until like I'm well over 60 or 55. So the biggest thing is I have a ton of ETFs because I don't even want to plan on picking and choosing different stocks for the next 40 years. That's way too complicated. I want to have the ETFs do the work. So we just have a lot of Vanguard, we have tech ETFs, S&P 500, Vanguard growth stocks, another S&P 500, and then more bonds because it's a good way to actually grow your money and bring down the volatility in the market and your portfolio here. So really guys, these were the top holdings that I have, and that's pretty much what about $200 per week looks like with an M1 Finance account over the course of about 6 months, okay? So my goal for this portfolio is by the end of this year, ideally I would like it to be over $30,000, but will I hit that? Hopefully, we'll see. We will see here, because that would bring a lot of passive income to me, which I'm super interested in. But overall guys, I hope you guys enjoyed it, and overall I hope you guys got something of value, and we will see you later. Remember to stay happy, stay positive, and stay safe out there. Take care everyone.